Welcome back to the channel, everybody. I am Mick Alphaneem. I hope you're all having a good day. Everything's looking good. We got to collect a lot of data. This was good data. I want to know who's strong, who's weak, who can collapse. If something happens in the legacy system or the crypto system, who's going to remain standing? I want to see companies sooner or later under pressure and prove yourself to me. And they didn't do so bad. I'll be honest. Hey, Ripple did pretty good. As I thought that they would be diversified, and they are. I think every wise person diversifies. You don't keep all your eggs in one basket. Now, Circle, on the other hand, Circle is not Ripple, okay? So they're going, hopefully they will learn and they will become better. That's up to them. I have nothing to do with that situation. That's up to them. However, I think that they'll be wiser in the future. But Coinbase and Circle didn't do so bad. I mean, it's questionable how you feel about them halting conversions and such, but they stood behind USDC and they said, hey, we're going to back it. We're going to make sure it has liquidity. I respect that. I respected that move to make sure that the depositors came first. Okay, so they showed a little bit of strength. This is good data to have. Good data to have. Let's take note of the things that went wrong. And let's take note of the things that went well. And we have something to work with as far as cause and effect for the future. Now let's see what they're going to do to repair everything and prevent a situation like this in the future. That I think is important now. But let's read this string of tweets from Brad Garlinghouse, because Brad Garlinghouse, this was posted about 23 hours ago, wants to set the record straight. So many people were getting on Ripple's neck. They wanted to know, people are waiting for XRP to fall, Ripple to fall. Oh my word. So they're going to be on Ripple's neck any chance they can. Here it says setting the record straight on SVB. And let me say this. As a for-profit company, you're going to sit through as many meetings as possible, briefings as possible. Make sure that you're well diversified before you come out with a statement. That takes some time, right? You're not beholden really to anyone. You're a for-profit company. So I understood why they did what they did, but I didn't have any worry at all, because if you are the network of networks, and that's what Ripple is trying to become, RippleNet, you have all of these banks, hundreds of banks signed up. So you have hundreds of banks that you can utilize as partners to diversify who's holding your capital. Ripple is not like other companies at all. And I don't think a lot of people quite understand that. So I expected them to be well diversified and not have all of their eggs, so to speak, in one basket. Well, let's read a little bit here, okay? It says Ripple had some exposure to SVB, as many did. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption. I didn't expect there to be disruption at all. I wasn't worried for a second, to be quite honest. We expect no disruption to our day-to-day business. And already, it means before all of this happened, they already had everything set up, already held a majority of our USD with a broader network of bank partners, which means they're well diversified. And that's what I would expect from a powerful team, a very intelligent team like the Ripple team. That's what I would expect. I expect that from any of the bank coins. They know how the legacy system is, so they still have to participate with them to a degree. That's how we're going to extract funds from them, by participating with them. So we interact with them a little bit. They interact with us. I'm trying to choose my words carefully here. You get what I'm saying? But that's how it goes. A little bit of back and forth here. We'll put some cash with you. Later on, you're going to use RippleNet. One hand washes the other. You get what I'm saying? Okay, so let's scroll down here. I'm going to skip past this second tweet because that's irrelevant in my humble opinion. This third one is potent from Brad Garlinghouse. And it says here, it's ironic that so much of what's happening as some companies scramble to make payroll highlights how broken our financial systems still are. Yeah, take those shots at the legacy system. This is all on them. They're at fault. It's their problem. While Congress and Senate is wasting their time pointing at crypto, they should have been pointing at the banks. That's an important thing to note here. While regulators are worried about crypto, you have a lot of banks that are in jeopardy. Not just because of SVB. I'm talking about outright. They have their own problems, folks. We've been covering it for a long time. Keep your eye on Credit Suisse. That's just one example, just one. Some of these banks are doing terribly, but But the legacy system has to be examined. The legacy system is what's a threat to people. What did I say before? Most people aren't keeping their money in crypto. Most people are keeping their money in the banks. So it will be wise for one to be careful with, like, do research on the banks you're using. Just be careful. You have to play chess here. Research your bank. Are they in trouble? How much revenue did they bring in? You know, there's so much going on. Just know the status of your bank. Do they have a buy-in clause? Like, do they have verbiage where there's a buy-in? How healthy is your bank? Do the research. So now let's continue right here. It says, highlights how broken our financial systems still are, i.e., wires are still not 24/7, 365. Rumors lead to collapse and the frictions of moving money within a deeply fragmented system. So, all great points. Ripple is doing a good job, in my humble opinion. Everything continues to move forward. We're going to defeat the SEC in that court case. Just my humble opinion. You could disagree. I respect that. The new financial system, now you see why they're moving so fast with the new financial system. You know, and we'll just continue to stay up to date on the catalyst. Be careful. Research everything you're getting into. You know, this is not financial advice. I'm not a financial advisor. I just think wise people would do research on everything that they're getting involved in, the banks as well, or especially the banks as well. All right. This is funny. If you scroll down below this last tweet here, somebody named Dr. Avinash Din Muhammad posted a little meme picture here. It says, which crypto, is Gary Gensler. It says, which cryptocurrencies are securities at the top? And then Gary Gensler just says, yes. You have to have a little laugh from time to time, relieve the stress. That was funny to in my opinion. So now let's move on to this next article here, okay? So this article is from newsbtc.com and it's titled Uniswap Founder Says Banks Are Massive Scams. We've heard that before. Let's read what this is what this individual is saying, okay? All right. So I'm not saying it. I'm gonna let this person say it. Hayden Adams, the founder of Uniswap, is convinced that banks are massive scams. I mean, if you understand, you know, how the banking system works and how they lend out money and they're not required to hold much or any reserves at this point. Says compared to decentralized finance protocol. Yeah, I can agree with that. It says here, in a recent tweet, Adams criticized banks' low collateral requirement, adding that they also pay only a tiny, quote, tiny percentage of their revenue to depositors. We all know that. They're terrible at that. The founder was also concerned about banks' ability to rug users at any time. Yes. Yeah, at any time they want. I mean, people have to understand the verbiage in some of that paperwork. But most of the people, they're not concerned. They don't care. They trust the banking system 100%. And I suppose that's their right to do such a thing. It says here, if you compare banks to DeFi protocols, you realize what a massive scam they are. Only 10% collateral requirements. Ooh, only a tiny fraction of returns paid out to users. Disgusting, of course. Users can get rugged at any time. Feeling bad for everyone negatively affected by degen banks. Yeah. Okay, so, you know, he's making some great points here. Banks loan the remaining 90% of deposits in fractional reserve system at higher interest rates. We read an entire article about the fractional reserve system long ago, and it said the same thing this individual is saying. And that was from an expert. However, the yield distributed to holders of savings accounts is relatively lower. While this is advantageous for banks as they don't have to hold a vast amount of capital while also being open for regulation, the end user, the depositor, is inconvenienced if these banks fail. Last week, we know all this about SVB and such. It says it is this limitation and the fragility of banks that Hayden thinks make the very base layer of the global financial system a massive scam. The United States Federal Reserve has since stated that it will only bail out depositors, not the bank. Well, they have other mechanisms that are questionable, other mechanisms that, because the banks are forced to bid on a failing bank, it puts their capital at risk. That's what people have to understand. So it's not a 100% safety net. This is a speech from Augustin Carstens, okay, of the Bank of International Settlements, that the Bank of International Settlements tweeted out this document today. And I just want to read this little tidbit here, right? It says, he begins here. It says, today I would like to make the point that to reap the greatest benefits of innovation in money and payments, we must think big. We need to have a vision for the future monetary system, the new financial system, and for the role of central banks in driving innovation that meets evolving needs. This is no easy feat, thanks to the nature of innovation itself, which is rarely linear and often unpredictable. Which is great, by the way. It's great that it's unpredictable, which means they can't catch us. They don't know what we're going to do next. That gives us an advantage, which means they can't just copy us outright because they don't know where we're going to go next. We have a myriad of different ways we can innovate. So no, we don't want it to be linear because it puts them at our mercy because they're lazy and they don't innovate. They only steal from us. That's it. Let's keep that advantage. My humble opinion. It says here, it's hard to believe that this was only 16 years ago. They're talking about Apple and iPhone and how that innovation took everything by storm. All these changes happened not because smartphones imitated computers, but because they let others use their creativity to develop new products and services through apps. So obviously this is all in correlation with the distributed ledger technologies. The smartphone offers a couple lessons about innovation. First, for innovation to flourish, it requires a stable and safe infrastructure that unleashes the private sector's creativity and ingenuity. So what they're saying is we can provide the stability. That's what they're saying, even though that's not true, but they're standing in the way. They are the gatekeepers. This is how they feel. So they're trying to drive this idea home into the minds of all of the CEOs, COOs, and presidents of the fintechs, of the DLT companies, the bank coin companies, that, hey, if you want to thrive in the future, you have to go through us. That's pretty much what they're saying here. This is like a sit down with the boss. This is pretty much what this is. Second bullet point. And second, the various components on a platform must be able to work together seamlessly. Once again, they're begging for interoperability. But is anybody hearing this? Anybody paying attention? They still don't have it. They're begging for interoperability. We're the only ones that can provide it. Don't worry, we have more articles to talk about that. Let's continue here. It says, just like when I use my phone to take a picture and share it on social media, this is closely related to the notion of composability, which I will develop further. Composability, they're always trying to steal, and then they change the name of something, put it out themselves, and claim it was their idea. No, not composability. Interoperability, right? It says, but in looking at these examples, we must also be aware of what not to do. Dominant technological platforms can often exploit network effects to stifle competition and lock customers inside walled gardens. Isn't that what you have in the banking system? The entire banking system is a walled garden. The entire banking system stifles competition. Is either you get to congeal with the new technologies and take advantage of them, or the people don't get to flourish. Isn't that the way that it is? You're the walled garden. I mean, can just one person call these people out? Someone who actually has a platform, to actually speak and have their voice be heard, like these people, just one time call these people out on their nonsense. This is nonsense. And there was an interview that Augustin Carstens did recently that a lot of people watched. It was potent. Don't get me wrong. There was some good information given. But Augustin Carstens, the head of the Bank of International Settlements, kept saying, we are innovating. We are coming out with these CBDCs. We are, are developing these DLT technology. There's no we. You didn't do anything. You're trying to take credit and glory from people who worked hard and built from the ground up. And along with those people were a lot of people who invested in cryptocurrencies for whatever reason. And that capital is what pushed the companies forward to allow them to innovate. So the people on the ground, once again, are the ones who contributed the most. And here you go, sitting on this high throne, coming in, trying to scoop up the glory for yourself. No, you get no glory. You people don't do anything but parasite off of what already exists, but we all know that. Let's continue on here. A unified programmable ledger in a public-private partnership. Oh, unified. It's interesting. Considering you have such a great relationship with Ripple, Stellar, and Quant. A unified ledger? Okay, let's read this little tidbit here. Around the world, central banks are exploring how to give money new capabilities. Let me pause right there. How are you going to pull that off when everyone hates they hate the West? I won't say everyone. My apologies. I speak in a particular way. My apologies. But many countries, and right now, it looks like the BRICS nations are going to have the bulk of the population on Earth amongst them. So who are you going to work with? How are you going to pull that off when you side constantly with the West? You've chosen a side. It's like Swift. Who's going to use Swift? They can try to quote, they can steal innovation all they want. I'm just going to call it what it is. Who's going to use them? The BRICS nations are on the rise and they're making major movements, gaining power, advancing technologically, and they're going to be making a lot of money. How are you going to access that? How are you going to move capital between them if you want to do business with them and you're going to need to? You can't use Swift. They're going to reject Swift sooner or later. They're working on systems so that they can. So Swift is pointless. Your systems are pointless. You will not have interoperability. The only way you can achieve that is through us, through the distributed ledger technologies. You and I both know that. We're going to keep an eye on the catalyst. I could be wrong. We'll see. It depends on what the rest of the world wants to do. But as of right now, it looks like they want to be independent from weaponized systems. And those are all of the systems that the West provides and their allies provide. Let's continue on here. A unified ledger is a digital infrastructure with the potential to combine the monetary system with other registries of real and financial claims. It would need to be a public-private partnership. So yeah, so you're conceding that you're going to have to flood us with some money. I'll take your money, no problem. I've always said that. We can do it without you, but I'll take your money, no problem. Because your money will definitely make the prices of these bank coins explode. So yeah, put that money on the table and everything will be able. Let's continue on here. It says it would need to be a public-private partnership with a clear division of roles and where the central bank is tasked with underpinning the trust in money. Like smartphone platforms, a unified ledger allows various components to work seamlessly together. But unlike them, it is enabled by open architecture that promotes financial inclusion and greater competition. Such a ledger allows for the use of smart contracts and composability. Now, pause right there. You see the hypocrisy? So it was recently that I believe, don't quote me on this, but I believe it was Fabio Panetta of the ECB who said, oh no, we're not going to use smart contracts. And remember, I said that's ridiculous. Now here you have the head of the BIS saying, yeah, we're going to use smart contracts. Who are we to believe? Of course they're going to use smart contracts. I don't know why the ECB had anybody saying such a thing. That's ridiculous. Smart contracts are one of the main things that they wanted to utilize, especially when it comes to stopping bank runs. So you saw what USDC just did, where they stopped the bank run. There was a run on USDC, the likes of which you would have saw much more of a DPEG than what actually occurred. And they stopped it. They just paused conversions. People couldn't move anything. And that allowed them the ability to repeg and sort things out before they got out of control. That's what the banks want. Right now, the banks can't do that. They don't have that ability. All right, so now let's move on to another article here. Okay, so then we have this article here that was tweeted out by Volante Tech, but it has a lot. I think this is going to have a lot of effect on Algorand, who is deep in India. At least the spreading of Algorand in India. As we know, they have been doing a lot of things over there with different medical offerings. They fed a lot of people over there, done a lot of good over there, and they're looking to expand the infrastructures in India, the Algorand-based infrastructures in India exponentially. So this here is from, this little section is from Sanjay Sharma, MD and CEO of iFinance. And it goes as such, quote, the year ahead could well be a point of inflection for India, as the world veers precariously on the border of a depression. So now it's not just me saying it. Now you have an expert, quote unquote, saying that the world is going towards a depression, not a recession like the US and the West wants to put out there, a depression. All right. It says on the border of a depression, and China's global growth engine takes a breather. Indian growth rate seems relatively less affected. This can indeed give us the momentum to pull ahead in the world stakes. Once again, this is what I was saying about the rest of the world adopting quite rapidly, I might add, the new financial system. They're giving themselves an advantage while the West is kneecapping itself. Let's go here. It says the budget should hence focus on supporting growth and stability instead of conservative incrementalism. As we pull ahead and reach for the $10 trillion GDP, there is no time to lose in addressing the social inequalities. Support for the 70 MN micro scale enterprises is the need of the hour, and this budget could make a start on the following ideas. First bullet point, lending to micro enterprises by MBFCs and banks should be encouraged. Just as banks have to meet a specific priority lending quota for agri, there should now be a specified quota for micro enterprises in the priority lending. This is very good. Next bullet point. Allocation for initiatives that help improve the quality of the produce of micro enterprises. Here, government should allow subsidies for private sector programs that can deliver technology and product improvement by such micro enterprises at scale. Next bullet point, health. Algorand is going to be deep in health over there with that offering that went over to India. I can't remember what their name is, but they were out of Voorhees, New Jersey. That I do remember. It says health and critical illness covers at affordable premiums for micro enterprise owners and their family so that their business may be protected from these adverse events. Next bullet point, continued credit guarantee support for the CGT MSE and simplification of the legal recovery requirements for very small loans below RS 2 lakhs. These bold steps will enable improvement in flow of funds to the financially excluded micro cell enterprises. This segment provides 95% of non-farm employment, and we can no longer turns out heads. Okay, I guess they mean turn our heads away from their needs. I believe that the budget 2023 will bring in a period of progress and prosperity for all sectors, MBFCs and beyond, and catalyze policies and regulations that support holistic growth of the economy. So India is ready to take off. So you already know Algorand is deep in India. Obviously, Ripple is deep in India as well. This is going to be interesting. This next 2 years is going to be very interesting, everyone. And India looks like they are ready. So now, let's go here very briefly to cryptonomist.ch. They have an article here and it's titled, Swift's CBDC brings together 18 central and commercial banks. Swift CBDC and the 18 banks encouraging its development. Swift is implementing the beta version of the central bank digital currency, together with the support of 18 central banks and commercial banks encouraging its development. This is not a surprise to me. Swift is legacy system. Swift is the West. They're going to back it. They have to. Even if they didn't want to, they have to. They are compelled to. It's like mafia type stuff. Everybody has to put the hand in. Put a little bit of capital in. All right. So, but this is it's irrelevant because the rest of the world that they're going to have to operate with cannot will reject any CBDC by Swift at a certain point because the BRICS nations are on the rise and they're not going to use a system where they could be. Not only were they sanctioned before heavily, a lot of the BRICS nations are controlled by sanctions and they're not going to want those control mechanisms to function with them anymore. But imagine how much more control Swift would have with a CBDC that's programmable. Of course, the BRICS nations aren't going to want that. So they're doing it because they have to, but I don't see this as any threat whatsoever. I think we're going to move actually more money than Swift in the future. Okay, everything in its time. I'm not saying immediately, but We have more opportunity than them. Ripple, Stellar, Algorand. We can work with anyone. We are going to be in the middle. This is how I see it. And we're going to move that money back and forth. So Swift can have all of the banks and all that stuff like that they have. We're going to operate with them as well. They will congeal with us and we'll be moving a great portion of that money back and forth. What does it do to that price? That's how I see it going. We're the only ones that are agnostic. We're the only ones that are neutral in the middle. Says, among others, there is the Italian bank Intesa San Paolo. So let's see how that is. So we at Algorand are working with the central bank in Italy. But then you have Bank Intesa San Paolo backing Swift, working with Swift. That money's going to flow into us. It has no choice. We're setting up a lot of the main infrastructures in Italy. That money's going to flow through Algorand. What does it do to that price? They can't escape us at this point. We're becoming very dominant. That's just my humble opinion. All right, just my humble opinion. It's not financial advice. I'm not a financial advisor. Okay, I'm just a humble researcher. Now, let's move on to another article here. So this one here is from CNBC.com and it's titled, "Dollar Slides as U.S. Intervenes on SVB Collapse." The dollar fell on Monday as markets bet the Federal Reserve will be less aggressive in raising interest rates to curb inflation after U.S. authorities stepped in to limit the fallout from the sudden collapse of Silicon Valley Bank. The president said that the administration's swift actions on Sunday to ensure depositors can access their funds in SVB and Signature Bank should give Americans confidence that the U.S. banking system is safe. I have to pause. People can believe what they want. Oh, my word. After all of this, they're still saying these things. The Fed on Sunday announced it would, it's not them saying it. It's that people really believe that. The Fed on Sunday announced it would make additional funding available through a new bank term funding program. It says which will offer loans up to 1 year to depository institutions backed by treasuries and other assets these institutions hold. The dollar index, which measures the greenback against 6 other currencies, fell 0.92% as short-dated treasury yields tumbled. The 2-year notes yield plunged 48.9 basis points to 4.099% in the biggest one-day drop since the financial crisis of 2008. The note was on track for its biggest 3-day decline since the Black Monday crash of 1987. Quote, "The financial crisis is cutting short monetary tightening. There's a big shift in rate expectations," unquote, said Mark Chandler, chief market strategist at Bannockburn Global Forex in New York. Quote, "The markets already is pricing in a cut again in Q4. He said that a little bit strangely. He said, Fed funds futures also tumbled. That's a tongue twister. Fed funds futures also tumbled, with expectations of the Fed's terminal rate sliding to 4.14% in December from above 5% on Friday. Futures showed a 21% chance of no increase in rates when policymakers end a 2-day meeting on March 22nd, according to CME's FedWatch tool. We have this article here. It's on seekingalpha.com, and it goes as such. As investors assess the follow-on effects of Silicon Valley Bank's failure, analysts are weighing in with how they see consequences playing out. Most see the Federal Deposit Insurance Corporation, FDIC, and Federal Reserve's actions as helping to calm investors' fears. Increased banking regulation is expected. They think more regulations is what's going to do this. This is going to solve this problem, especially for smaller banks. Was SVB considered a small bank? And some asset classes are likely to benefit. The spillover from Silicon Valley Bank's failure is relatively contained so far, according to Deutsche Bank's DWS CIO view note, but it can manifest itself in 4 steps. First, the direct effect of SVB bankruptcy and FDIC receivership, which has already occurred. Second order effect through the behavior of clients that hold uninsured deposits at other banks. Third is spillover to vulnerable companies with weak balance sheets. We were just talking about that. Hey, members only section, click that join button. Watch that video I released yesterday. Let me read this again. You can get the list on there. Spillover to vulnerable companies with weak balance sheets. I'm just going to move on from there. Or those related to crypto assets. Of course, they got to throw crypto in there. And fourth, mass liquidations in market and widespread contagion. Of course. I mean, the people are going to lose trust, and I mean, it's reasonable that they do so. In my humble opinion, stemming contagion. The failure of Signature Bank is the first victim of the second order effects. The note said, the U.S. banking regulators' actions announced on Sunday are, quote, the first steps to restore confidence and avoid mass withdrawals of deposits. That's not going to stop it. I don't know why it would. TD Securities analyst Priya Misra calls the Federal Reserve's new bank term funding program, quote, a great comfort. Is that so? I mean, they have to say that. They have to play the game. They're a part of the system. I wouldn't expect them to go against the grain. Would be bad for them. So now, we're going to end off with this little article here. It's on Cointelegraph.com, and it's titled State Caps or Federal Regulation. What's next for political crypto donations? Well, first of all, they said there were over 300 illegal donations done by Sam Bankman-Fried to politicians. What happened to those 300 politicians? Did anything happen? Probably not. I haven't heard anything. So until you remedy the problem of politicians taking illegal donations, I don't know what more you can do. The industry isn't having the best of its moments now. Well, the politicians aren't having the best of their moments, but it's not highly spoken about on mainstream media. But it should, amongst the people should be telling each other, like, hey, be careful. Let's vote some of these people out. They're corrupt. They're taking illegal donations. They're slanting the chessboard, so to speak. The industry isn't having the best of moments now, but the topic of campaign donations in crypto remains a relatively safe space for innovation. On January 25th, the Committee on Elections introduced a bill to the Kansas House of Representatives aimed at capping political donations via crypto at $100. Via crypto? Right. Regardless of the success of this legislative initiative, the state of Kansas won't be the first jurisdiction to target anonymous donations. That's what you're worried about. You're not worried about the illegal. This is what that article said. I'm not saying it. The article said there was 300. There was illegal donations made 300 different times to different political entities. That's what I want to know about. You're worried about anonymous donations when you have faces on donations that were made illegally. What happens to the people that accepted those donations? I mean, hey, there's so much going on here, and you know, it's just a sad, sad state. But I mean, those who know, those who have eyes to see, those who have wisdom are moving forward, taking precautionary measures, building a strong life for themselves so that whatever may come, if it be negative, then they can survive. They can thrive through anything. They're making themselves stronger with knowledge. They're building things for themselves in life where they have stability. That's what the wise ones are doing, so that they're not affected by these things. Strengthen your mind, strengthen your heart, your spirit, things in your physical life, so that whatever may come, good or bad, you're going to thrive in it. But the old world, the old systems, they're burning themselves to the ground. They're burning themselves. There's no way that this can continue. But that's just my humble opinion. I'm just a humble researcher. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.